Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, so a wild day in the market out there. I'm just coming back from a massage, so a little bit odd to leave this planet and then dive back into stocks right afterwards, but we'll see how it goes. So we had a very significant day today with the bears finally proving it. So look at the volume. The average 20-day volume is 65 million, and we more than doubled it. So it was massive bear volume throughout the day, and the most important thing for me was the bear action happened during regular trading, as opposed to news coming out in extended hours and seeing a gap down where the bulls do nothing but buy. We had a scenario where we started weak, and the bears kept control the vast majority of the day. And the way that we were selling off was a bit unusual. You see that kind of a pullback, and you see a 2% drop on the S&P 500, and you expect the 5-minute RSI to be dropping down into the 20s multiple times. But this is a scenario today with the selling that looked very contained. And we bounced off of 30 RSI, going just under it on the 5-minute time frame a few times, but we never really got that oversold on the 5-minute chart. These little weak bounces, we had a scenario where we would get lower lows without a whole lot of follow through, then we'd cool off RSI levels, and then we drop to a new low of the day. So we ended with massive bull volume. We'll look at that in just a second. But today was the kind of day where fake outs have us looking in the other direction. So with clear trend changes, higher lows and higher highs, we look bullish or bearish if it's lower highs and lower lows. In this instance, though, we would see a couple times with a bull break and then zero follow through, and that told us to keep looking bearish. So here we had a bounce attempt that didn't really materialize into anything, but the most specific example for me was, I guess this is it right here, where we had our low, high of a bounce, higher low. We had a higher high here by 9 pennies, but then straight into a low of the day. And then at that point, we couldn't break that low of the day by any significant margin. We saw lower wicks continuing to close above 288, and then we saw a bounce. So it was the kind of scenario where I was watching for a 5-minute trend change. I said in the chat room, 288.97 key resistance has to break, and it broke. And as soon as we saw the lack of follow through, we said this is a red flag. With no follow through, we have to be we have to be cautious as bulls. So we dropped down, and after hitting that low, 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 as long as we kept closing these candlesticks above 288, that tells us now we look in the other direction because we're getting no follow through. So a bit of choppy action, but in the end, we had a bull, massive amount of buying. Look at this 15-minute volume. Bears had full control of the entire day, and then at the end of the day, this volume speaks volumes. So this volume is huge, and if you look at the 15-minute time frame, it's some of the highest volume that we have seen during regular trading. This candlestick right here is with shares settling at the end of the day at 4 p.m., but if you're looking and comparing it to any other 15-minute candlestick really in a long time, it stands out. The question is, can the bulls follow through with that? That was the bulls buying the dip, and shorts being forced to cover as some resistance levels broke. But again, the volume is extremely notable, and we ended up with a bit of strength after hours, and looks like that faded into the close of after hours here. So the question is, can we follow through with this? Can the bulls change the hourly trend? This bounce is just a lower high on the hourly at this point. Tomorrow, the bulls have to hold 285.81 and then see a bull break of the top of that bounce, 288.69, to change the hourly trend. Keeping in mind, long-term perspective, we're looking at weekly consolidation, and we're looking for a higher low compared to 277.64. So unless we see another couple days where the bear volume is massive and we drop hard, we're not going to sway from looking for the weekly uptrend to be maintained. Again, we have the headline scenario with the China deal to be thinking of, but today is pricing in a large part that there's not going to be a deal reached by Friday. So it's all about the hourly as far as clarity goes. I personally traded XBI. Well, I traded LABU, 3 times leverage bull of the biotech sector. We'll get to that in just a bit, but a ton of volatility. IWM still has a daily uptrend. Anything above 155.68 is a higher low. And you can see the bulls buying the dip to maintain the daily uptrend. Same thing on the hourly. Have to change this trend into tomorrow to be looking for follow through. If we change the hourly trend, odds of a daily inside bar will be high, but odds of a daily inside bar today were fairly high with where we opened, and as soon as the bears started taking out those support levels, bears were impressive today, and they were relentless until the last 20 minutes. QQQ. So we dropped down to lower lows. Again, a solid lower wick, so pretty significant buying of the dip. Have to change the hourly trend. Support is down at 184.51, and resistance is up at 186.78. That's the range that we're watching into tomorrow, and we have to see a higher low and higher high to have any kind of relief for the bulls. Otherwise, if we break the lows of today, get ready for significant bear volume and weakness to continue. That low is definitely a line in the sand, and when we broke that low of yesterday, today, we entered free fall mode to a large degree. So breaking that low is certainly important for the bears to see follow through. So looking at XLF, XLF lost a little daily support here and is pulling back. Again, the weekly consolidation, bulls have so much space to work with to form a higher low, and this could still be a bull flag. So let's look back at SPY for just a second, and you could make the argument that we still have weekly bull flags. It is less likely after a day like today, but we can't lose sight of the bigger picture. Whenever I'm doing analysis, it's always starting on the longer term time frame and then zooming in from there. So if I know that we're looking for weekly higher lows, I'm looking for, number one, clues that the weekly higher lows are going to be less likely to form, which would be significant bear volume days, closes at the low of the day without bulls buying the dip, and multiple days of follow through. And if we see the bulls buy the dip, change the hourly trend, see massive bull volume, that tells us keep an eye out for those weekly higher lows. So XLF easily looking for a weekly higher low. It's just a question of where that's going to happen. Hourly trend change needed here as well heading into tomorrow. If we do not change these hourly trends, that 20-minute bull move didn't prove anything to us. XLV support looking down at 88.48, 88.50, and 88.36, so a bit of a base of support in the mid 88s. Hourly bounce, just cooling things off, just a lower high, can easily drop to a lower low. Bulls have to show up and play defense tomorrow and hold the low of the day. And the weekly time frame, we're still looking, actually the daily, we were still looking at this resistance, remember, 91.03, looking for a lower high compared to that level. And that lower high certainly looks set at this point, and now we're looking for the higher low compared to 84.65 to see this daily range tighten. Bulls definitely prolonged this move an extra 3 days than I would have anticipated, but now we're getting this weakness and we're looking for this daily range to tighten. Biotech sector is also tightening in its own way on its daily chart. So an equilibrium to be watching with our low, high of the bull move, higher low, did break resistance but no follow through. So that was a bit of a red flag, the fact that we did not see any follow through. We needed to see it today. We didn't. We rejected from the high of yesterday first thing. That was a bottom fishing play on LABD. And now we're looking to see, can the bulls hold 82.80? Surprising that we dropped all the way down and broke that low of yesterday. It happened right at the end of the day and it only broke by a few pennies. So we do have a double bottom at the low of the last 2 days. And my trades with XBI were just based on SPY, seeing SPY with no bear follow through on certain instances. So I played this equilibrium bull break just for a quick flip, exit half, and then see if the bulls can get any kind of follow through. Ended up going 2 for 3 with XBI, trying to get that end of the day bounce, but I got in too early, was stopped out, and then the bounce got back to about where I was looking to get in originally. VIX. So congrats to the bulls. These are gains that pile up really quickly. So these are explosive moves, and if we look back historically, the most significant explosive move was certainly in December. Other than that, though, we have to assume if this is not a December collapse scenario, that we can look back at the other pullbacks, and they've all lasted 3 or 4 days. So we know unless we're going to see massive bear volume and just a straight drop, we have to be looking for, the bears are looking for shorts. And why we see these explosive moves are because how many people, how many institutions, how many hedges, they're short the volatility index. And that's because it's guaranteed money to a certain extent. If you're in a long-term uptrend in the market as a whole, and you just short these volatility spikes, more often than not, you are going to do well. And it's just going to be prolonged downtrend and consolidation. And then you just got to be sure and stop out to not get stuck in a position like this where we see follow through. But you better believe there's a lot of traders looking to short the volatility index on this current spike. So we're looking up at 2180 is the highest price we made it to. And again, the most important thing for me is how many days in a row is this pop? And we can definitely see a pop and then consolidation and then another one, which has happened a couple times when things have gone extreme. But at this point, odds, we're talking risk to reward, Am I looking to make a bullish entry in the volatility index, or am I looking to make a bearish entry? And for me personally, I would definitely be scouting for a bearish entry. We still have an hourly uptrend at this point, but in general, volatility spikes and then fades as ranges tighten. Oil. So oil on the daily time frame pulled back pretty hard today, but gave us a daily inside bar. The candlestick has already rolled over, and we're forming another daily inside bar. So the 4-hour time frame, I'm looking at the low of down near $60, high of $62.91, higher low of $60.64, and now we're looking for a lower high compared to $62.91. So essentially a 4-hour equilibrium. The bulls want a bit more follow through up towards 62 to be comfortably snug in that equilibrium. And on the daily time frame, it's a nice contained little lower high, lower low pattern, looking for the weekly higher low to form. So anything on oil above 54.50 is a weekly higher low. We're now back to exponential support, and we'll see if the bulls can change the daily trend. And there's certainly correlation with the weakness in oil, and they did break a little bit today because oil saw a much better bounce from oversold conditions this morning, and SPY correlated with it, but then broke that correlation. It was really the tech sector that started to see weakness right as oil started bouncing, and the tech sector weakness offset the oil bounce, and SPY dropped to lower lows. Natural gas needs to see this daily inside bar break bullish to see our higher low form at 2492. If that breaks bullish, the higher low is set, and the bulls have to break 2596 to change this daily trend for the first time clearly in quite some time. And we would then zoom out and look at 272 as the next resistance from there. So I hope you're well. Congrats to the Bears. Definitely deserve credit every now and again. They don't get the spotlight often, and they got the spotlight today. The question is, can the bulls follow through with that massive volume and the hourly trend change attempt? And where we open tomorrow is going to give us a good clue. If we open at 287 versus opening at 288, that's a big difference on what's the most likely scenario. So as always, we don't predict what's going to happen. We react. And waking up tomorrow pre-market is going to give me a whole lot more information than I have right now as far as which direction I'm going to be looking tomorrow. So do good things out there. Hope you're well. Going to be traveling a bit to Colorado the next few days, so videos will be a bit sparse and timing will not be the same as always, but we'll do what we can, and I'll be back at the end of the weekend, and I'll see you soon. So we're checking in now. We got the chard going. Eggplant still struggling a bit to get its roots down. And we got some string beans over there. Potatoes exploded. So I held up the potatoes by putting dirt around the base of them so that the potatoes can grow in. That's a summer squash. Cilantro's doing well. Got the basil up. Lots of basil for pesto. And the cucumbers are climbing like mad. I'm going to run them up there, and I've also got too many, so I'm going to run them along the railing as well. And these tendrils, they reach out to grab, and you can put them and touch the string, and an hour or two later they'll be wrapped around them. It's pretty astounding how fast they wrap. And the tomatoes are going. I'm going to have to prune them because they're going to get crowded in there with 2 to a pot. And if they're too crowded, then that's when the moisture accumulates and the dew in the morning, and that leads to blight, which is a big problem in this area. So the solution is don't let soil, blight's a fungus, so don't let the soil splash up on the leaves, and cut the lower branches once it's big enough so that the lower branches aren't near the soil. And you want it to dry off every morning as soon as possible, hitting the earliest light. Pretty much it's inevitable you're going to get blight. It's just how long until it hits. More cukes. Bigger guys. So trellising them up, the strings. And I got some backup guys that I'll send out this way. And the peas are coming along. So peas are growing up their trellis. I do have some aphids and slugs that I'm dealing with, but strawberries. And these are the winter peas that are climbing up. And spinach. That's the update.